So, good evening once again to everybody, and welcome to the last day of our bootcamp series. So, this particular session, I said, is going to be interactive. The first 20 minutes of the session, I'll just try to talk on some certain things concerning trading, and the remaining minutes of the session, I'm going to answer your questions or whatever issues that you have or anything you haven't understood throughout the training, and we talk about it. So first and foremost, I'm going to talk about risk management, and then I'm going to talk about your psychology as a trader. First and foremost, I gave you I think we were voting on the habits of a good trader, which we talked about discipline, emotions, uh, goal setting, and all those type of things. All right, now I mentioned that trading is actually going to change who you are. It's actually going to change your life completely, because to be a successful trader, it needs it's there are habits that you must have, all right? And discipline here stands at the top of it. You need to be disciplined, and you need to be a very patient human being. Okay, you need to be a very patient human being. You cannot be disciplined in trading and you are not disciplined in your day-to-day activities or your life as a whole, right? Outside of trading. And you cannot be patient in trading and you are not patient in other aspects of your life. What does this mean? This means that, like I told you guys, that if you want to sell, all right, you must sell something very high, which is you should wait at least some where price around this point, which is another block, and you sell at that point. Now, if price is still if we still have price, all right, if we still have price trading at this point, if we still have price trading at this point, and you are not patient enough, all right, you are not patient enough. The moment you see price like trend, like it's like you want to sell, but what is the rule? You're going to sell very high, right? You're going to sell very high. But now, if you're not patient, you're going to get in the trade and it's not going to be on your favor. It's going to take you the whole time because it has a long way to go up. All right. So these are the things that patience gives you. You are patient enough to wait for price at your zone. And believe me, just this patience is not easy. Okay. It's not easy. That's why like there are billions of traders, but not all of them are really patient enough. There are few traders that are actually patient in their day-to-day lives and in trading as well. So when you are currently looking at the charts, you will not actually be patient enough to wait for price to come to this point. It might look easy, but when you're going to start trading life, you are going to understand what I mean. Okay, so first and foremost, patience is a virtue and is something you need to have as a trader. What does this mean? It means you must be patient to wait for price at a zone where you want to trade. Now, the last lesson we talked about was order blocks. All right. Now, if you want to trade order blocks, okay, if you want to trade order blocks, which means that this is your order block and your price must come to the order block before you sell. Then this means that if price is still around this point, you are going to do nothing, right? You are going to do nothing until price comes to your order block before you sell. It is as simple as that. But now for you to actually sit and do nothing here, that is where the money is sitting, right? Like you are preserving your money, you're preserving your capital, and you're aiming like a sniper. Okay, that's a common phrase we use in trading, like trade like a sniper, not like these guys with a machine gun, they're just catching bullets everywhere. You need to trade like a sniper, which means you wait patiently at a particular level. You know why you are waiting, you know where price will go, and you know why it's going to that particular point before you engage. Now, if price is coming back to this other block, right, this last up close candle before this down move, now, if price is coming to this other block, it is coming there to mitigate orders. Remember the lesson I talked about the other blocks? I gave you the theory behind the other block. Now, price is coming here to mitigate these orders. That is the more reason why you are waiting. All right. So price should come and then you engage. So you have to be very, very patient. Now, being patient now, that's part of it, right? Now, you need to have rules. And the rule now is you will only engage if price comes to this other block. This means that even if price should want to continue selling, you are not going to be interested. If price should continue going down, you are not actually going to be interested, because your rule is that you are going to engage only when price comes to this other block. And that is what we call discipline. right? You are following rules. You are following rules. You not just see as price is printing some candles and you start to sell. Immediately start to sell now, price will start to go up and you are going to be having a losing trade because you were not disciplined. You did not follow your rules. Okay. And now the second one is risk management. If you should now, this is the truth about trading. You are not going to have all 100% win trades. All right. You're not going to take 100 trades and all of them are winners. No, you are going to lose some trades due to the uncertainties that are there in the marketplace. We have fundamentals. We have so many aspects that can disrupt price in the way you were expecting. All right. Well, this means that you can actually be expecting price to buy from here to this other block and you sell from here. But now there are fundamentals that can actually change the nature of price. All right. Now, let me give the common one. Let's say if price wants to, this is the dollar index. You're waiting for price to buy, right? Before it sells. Now, for price to buy, it means the currency is actually appreciating, which means the economy is doing well. But what if at a certain point, the economy is not doing well because of some negative stuff or negative things happening in America? What if there is a civil war in America at the moment? Price will not go up, all right? Price will not go up as you're anticipating. It's going to drop because uh, it's a bad thing, all right? It's a negative impact on their economy. So something like a civil war, let's say the death of a president, and it's going to cause the economy to be weak. All right. They are going to be experiencing a loss in their economy, and it's not going to be something that will make the the the, the economy to instead appreciate. No, it's going to drop instead. All right, because the civil war, they're going to be destroying a lot of things. So many businesses will not function. They're going to render so many people unemployed. People are going to die, and so on. And that is bad for economy, right? And things that are bad for the economy, you will notice a downtrend in that particular stock or whatsoever. Right now, lately on Facebook actually lost. I think it was last year. All right, they lost the reality it experienced a lot of losses. And right now, if you should look at the Facebook chart, remember Facebook is actually something that you can trade, or right? There are stocks you can invest in. All right. If you look at the stock, the chart of Facebook, you will notice that the time that it lost its shares, it was actually on a huge downtrend, all right, because something actually happened which was not good for the economy. All right. But now, if you look at the origin of Facebook, all right, the original chart of Facebook, you'll notice that it started as something very zero, and it's since then it has been in an uptrend because the company is actually improving. It's actually improving. Now, it's the same thing with Bitcoin. Bitcoin started as something 0.00 something, and now it went right up to 50 something thousand dollars, which means that the crypto it was actually increasing, which means investors came in and they invested, and as it was going up, it was actually good. But now we are on a bear market, which now Bitcoin is dropping back, right? So those are the simple things that can actually disrupt price from making your analysis 100%. So what I'm trying to make you understand here is that there is no analysis that is going to be 100%. All right. Now, if you should have this mindset that there is no analysis that is going to be 100%, even me, I do have losing trades. I can plan my analysis to do something like this, and it does the opposite. All right, which means I was wrong. Okay, I was wrong with the way I try to do my analysis. Like I said, there is no strategy that is 100%. All right, we are having edges. We have an edge over the market, which means that in a series of 10 trades, I can be having like eight trades, like 8 of them as wins, and maybe I'll be having like 2 losses in the trades, right? But now, since I know that I must have losses, since I know that I must have losses in the trade, that is why I'm going to respect my risk management. Okay, I'm going to respect my risk management in the sense that I'm not going to go into the market with all of my accounts. If I should have an account balance of if I should have an account balance of $100, let's say $1,000, and I want to sell from this other block just as we outlined. Now, what I'm going to be risking in this particular trade that I want to take will be at most 2% of this my account balance. All right, it's actually going to be 2% of this my account balance, nothing more or nothing less. You get it now. That is the standard for the industry. You don't risk all your accounts in a single trade. Why? Because you're going to have some losing trades. Now, what if I should just go into the market with this $1,000 in this other block and it did not go as I was planning? I'm going to lose all my $1,000. That's right, right? Because I said there is no certainty here. There is no 100% win rate. You are going to experience some losses, but now with risk management, your losses are going to be very small and your wins are going to be very huge. All right. That is the edge that you have over trading. It's not like this casino or whatsoever that you feel like you don't know if you are going to win. You don't know. It's not like that. All right. Trading is actually a business. All right. You have an edge over the market. But for casinos and all those things, the owner of the casino have an edge over the players. Why? Because as long as the players are going to play, that's actually gambling, right? You are always entitled to lose. Maybe two or more people might win, but imagine the millions of people are going to lose, and that's why the casino owners will have a lot of money and stuff like that. So, but here we are having an edge, all right? You have so many things that can give you that precision. You have so many things that can give you the certainty of a trade. But now what I'm trying to make you understand is that there is no 100% analysis. We can actually analyze that we are on a downtrend right now, and you'll be waiting for price at a premium to sell. Right now, this is a good example. Listen closely. You'll be waiting for price at a premium to sell. Remember I said when you are selling, you sell high. When you are buying, you buy low. Now, at this point, we know that this is actually a downtrend. And now, what if you're waiting for price to sell at this point? And instead of price selling here, it starts now to be in an uptrend. It starts to break a structure and now starts to continue an uptrend. Now, what if you are sell at this point? You risk all your accounts. All right, you are going to experience you are going to you're going to blow your account. All right, you are going to lose all your money at this particular point. But now, what if you risk only 2% of the account? All right, you're still going to have a huge account balance now to start engaging in the uptrend. All right, it is as simple as that. That's the simplest explanation I can give to you about that. So have this mindset that your analysis are not going to be 100% correct all the time. Okay, all the time. You are going to have wins. That's quite all right. But you will always have a loss. Okay, you are going to have a losing trade. You are going to have losing trades. So put that in mind so that anytime you are entering your trade, you are going to use the correct lot size. You are going to use the correct lot size, and you are going to risk to the minimum. You should not have $1,000 and you are risking $50 in a single trade. That's too bad, and that's not how to manage funds. All right, you should be a good risk manager. You should be a good risk manager. You don't risk more than 5% of your capital in a single trade. You should never do that. All right, and you should know the type of lot size that you are going to use relating to your account balance. If you don't know, you should go back, back to the second, I think the third day, right, lesson, or the first or second lesson of this series. You are going to understand which type of lot size to use in which type of account. So I was talking about risk management, which is very important in your trading journey. So you have to know what you are risking in a trade, and you should never ever risk all your accounts in a single trade. You should not even go more than 5% of your accounts in a single trade. If you can see my chart, please let me see on the chat box. Now, those are the things that will help you to stay longer in trading. Okay, you have to be disciplined, you have to be patient, you have to do good risk management. All right, now the emotions part of it is that you are going to actually lose money. Like I said, you are going to actually have some losing trades, but now it's the way you handle the trades that is going to can see your screen. Okay, the way you handle those losses, the way you handle those losing trades, it's going to determine your trade. It's going to determine how you are going to take the other trades. Like, let's say now let me just give a quick example. Let's say trader A. Okay, let's say trader A and we have trader B. Now, all of them, they have $1,000 account balance. Now, trader A took a trade with the same, they took the same trade, all right? They took the same trade, and trader A risks only 2% of his capital. Now, trader B risks 100%. That means he risks all his accounts in that single trade. Now, if that trade should not work out, that means the trade is a loss. Who here is going to feel so? That is, trader B here is actually going to be depressed, or is actually going to feel so bad. He's going to feel the pain of losing $1,000 account. You understand? Now, this trader A, he's going to still have a lot of money in his account to trade. Now, which means that at this point, this man here will be able to control his emotions, because he has not actually, he was not so exposed completely to the market. But this guy here is going to feel very bad. All right, he's going to be really affected because he has lost all his savings in a single trade. So risk responsibly. All right, 0.2% in a single trade, nothing more. Why? Because you don't know when you are going to have a losing trade. Like I said, you might feel like you're in a downtrend. All right, you might be selling, making money, and the next time you feel like, okay, you should sell again, and that is when price is going to make an uptrend, and then this particular trade now is going to be a loss. But what if this particular trade being a loss at this point, meanwhile you risk all your 100%? You are going to you lose all the profits that you have been making from here, right? So that is simply it about risk management and psychology. I'm going to open the group now. Okay, if you are trading with $100, how much should you risk? You should not risk more than $5, okay, in a single trade. And you should use 0.01. You should never use more than 0.01, okay? Only one position, 0.01 as a beginner, all right? Until, if your account goes to $200, you can now use 0.02. All right, if it goes to 300, you can now increase to 0.03. It goes to 500, you can zero to 0.05 at most as a beginner trainer, right? A beginner trader. So when you get more experience, that's when as your capital is increasing, that's when you'll be increasing your lot size. All right. So please, if you have questions, you can write them on the chat box. I will see them. So when you notice you are already losing, can you stop the trade, sir, to save some cash? Actually, that's why you use a stop loss, right? You enter a trade with a stop loss. All right. You calculate your risk. If you are risking $5 in the trade, your stop loss will be where that $5 is. All right. So which means if price you hit your stop loss, only $5 will be deducted from your account. All right. But if you put your take profit, which means if you are risking $5 to have $20, and your take profit will be at the $20, which means if price will hit you at $20, your take profit $20 now will be added to your account. It's as simple as that. You use a stop loss. All right. That's how you protect your capital, by using a stop loss. All right. Which means as we are selling from this other block, okay, as we wanted to sell from this other block, now if price should be taking the high of this other block, this is where your stop loss is the high of the other block. So which means you are entering from the beginning of the other block and your stop loss is here. And this range can be $5. All right, depending on your account size. Another person will have this range as $100,000, depending on his account size and his lot size. All right. So all of you should have a stop loss at the high of the other block. All right. It's like that. So if price should want to go up, like changing direction, then your broker will close a trade for you at this point, and you are not going to incur all these losses right up to this point. So can you increase your take profit when you see that you took a that it took a value to close? All right. Well, if you, let's say you bought at this point and you wanted to close your trade at this point, but you discover that price will go right up to this point, actually you can still leave the trade. All right. If your take profit was here, you can still shift your take profit to this point. Okay. If you discover that price will come right up to this point, but if your take profit was here and you bought from here, and price comes and hit your take profit, it's going to close the trade for you. Even if it's going up, you are not going to be in the trade again. But if you discover that it's going up, meanwhile it's still around this point, and you shift your take profit now to here, then price goes up and click, that's when the broker is going to close the profits for you. So please, does it mean we begin with a nano lot? No, I said a mini lot, which is 0.01. All right. You start with 0.01. Then when you start with 0.01 and your account is increasing, you go to the mini lot, you go to the micro lot. All right. I mean, sorry, from the micro lot, this is actually the micro lot. And then the mini lot is 0.10. And then the standard lot is 1.00. Nano lot is in indices, all right, which is 0.01. Okay. This is not applicable now in Forex. It's too small. Okay. High spread is killing small capital trader. $100. What is your advice? No, 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 no. It's not about high spread, okay? But it's try to trade major pairs like Euro USD, GB USD, pairs that have US dollar. They actually have a good spread, and it depends on your broker as well. But $100 spread should not be too much of a problem for you. But now, please try to understand something. It's not about making money at the beginning. All right. You should try. Yeah. Thank you. 0.01 is a micro lot. Good. So you should try as much as possible to master the trading act. Okay. It's not about trying to flip $100 to 1 million. It's possible, but that should not be your main focus for the moment. Try as much as possible to learn the skill very well. If you learn the skill very well, there are prop firms that can give you hundreds of thousands of dollars to trade, and you take 80% of the profit if you are a good trader. But if you are not a good trader, they cannot give you that capital. All right. So, which means that even if you are dealing with $100, it should not be a problem for you. Try to master the trading. If you master the trading and you are a good trader, even just around you, you are going to see people who will be willing to give you millions of francs or dollars to trade for them, and you people share the profit because you are a good trader. But if you are not a good trader, nobody will be able to risk their money like that for you. Okay. So at the beginning, don't be so much interested in the money part of it. First, put your mind to learn. All right. Submit to the learning process. When you learn now, that's when the money will come looking for you, not you after the money. All right. It's as simple as that. So please, getting your questions. We're having less than 3 minutes to end this session tonight. And that was, who was that? I programmed this session not to last more than 40 minutes. And audio is breaking, sir. Please, sorry about that. I think it's okay now. Let me get more of your questions. We are less than 2 minutes to the end of the session. I'm going to make a lesson on the lot size calculation. It's very important, okay? That's a very, very important thing. Because if you don't know your lot size, you can go and you're having $100 account, you go and use the standard lot. Your money is going to go for vanishing. All right. So you need to know your lot size, calculate what you're risking in a trade before you enter. Okay. So there are actually so many other things, so many other things that I will always be sharing with you guys. Okay. Even on my YouTube channel, I have lots of videos there that I've given out for free. Okay. I'm not charging anyone, and it's what I'm using that I'm giving it out for free. Okay. And only the people that are going to put in the work, they are going to be submitted to learning. Those are the people that are going to succeed. That's why you have free knowledge everywhere, but few people are succeeding. Why? Because people don't value free things. But the free stuff out there is actually working. But people are so lazy to submit to time to learning that particular thing. What I'm giving out for free is something that was supposed to be paid for, but I am giving it out for free so that you will not have an excuse like you do not have money to come to my mentorship, you do not have money to pay for VIP mentorship, and so on. You can have it, or you have the free learning resources. Make good use of it. Submit to time and learn. Maybe people who pay $500, those are the people that they feel like if I don't learn now, I'm going to lose $500. They are now committed to learn. All right. But as if you are broke, you don't have money, try to use this to your advantage. All right. So no more question. I haven't seen any question. So I'm going to open the group and then we'll see how we can talk from there. So thank you guys for joining this session tonight. Let's talk on the WhatsApp group. Thank you very much.